the trade is developing pretty nicely, and then boom, our take profit is hit. So simple, clear, easy way to identify support and resistance levels and use it to your advantage. Moving averages is probably the most powerful tool that you can use in day trading. It is really simple to use, simple to understand, and it can be a great addition to your day trading strategy. A moving average is an indicator commonly used in technical analysis. By calculating the moving average, the impacts of random short-term fluctuations on the price over a specified time frames are mitigated. Shorter moving averages are typically used for short-term trading, while longer-term moving averages are more suited for swing traders. Now, moving averages can be used in many different ways, like identifying support and resistance levels, identifying the potential entry point, or identifying the general trend. Basically, whatever you need for your day trading strategy, you can take from using moving averages. Boom, so when you have it on your chart, you can see that basically the price finds resistance and support levels like this. Boom, so we have a point over here, a point over here, a point over here. So this EMA line usually supports the price, or the price can find resistance at this line right here. So what you can do is combine it with other tools like traditional support and resistance levels, or market structure levels, or anything that you can use in your strategy. Combine it with the EMA of input of 50, and then you will have a strong confluences that it is a strong level that you can use to enter into the markets. So the second way to use moving averages is basically to have two EMAs on the chart at the same time. So this approach is a strategy on its own, and it's called a crossover strategy. Basically, you need to have two EMAs on the chart. One is a really short-term EMA like 7, and the other is a little bit longer like 16. And basically, when a shorter term EMA line, in this case red line, crosses the blue line, the longer term EMA, that is an indication in this case for you to open a position. And the third and the final way to use EMA is pretty simple, basically for a simple long-term trend identification. So in this case, we need to use a longer term EMA with an input of 100 or even 200 if you're talking really long term. Basically, this is more used for swing traders, but you can use 100 input EMA for your own day trading. So basically, it's pretty simple. When the price is trading above this red line, which is an EMA line, that means that you are interested in buying because the trend is bullish. And when you do have a cross to the other side, now you're interested in selling because now the trend has shifted into the bearish trend. Boom. Now we can move on to real-time Forex charts and see how we can apply these three different ways to use moving averages. We are currently using 2-hour time frames, but basically what you can do is use this strategy on any time frame that you like, and whatever time frame fits your trading style best. Now let's see what the price is telling us. First of all, we instantly see that we have some level over here because the price is being resisted from the top and then from the bottom. Boom, so we can mark a level over here, and we have our traditional support and resistance level. But probably you know that you cannot trust only single support or resistance level. You need more confluences, and in order to do that, you can put on your EMA of 50 like this. Boom. And now let's see what do we have here. Boom. So now we see that the price is being resisted and supported at a certain level. So here we have our traditional support and resistance levels, and not only that, but we also have an interesting zone right here where our traditional support level is being combined with the EMA of 50. And so imagine for a second that we are on this situation over here, and now what we can do, we have our two strong confluences that the price is being supported. We open a buy position like this. Boom. Stop loss, again, according to your strategy, doesn't matter. In this case, we can put stop loss of 30 and a target of 60 pips. And now let's play the price and see how it will play out. The trade is developing pretty nicely, and then boom, our take profit is hit. So simple, clear, easy way to identify support and resistance levels and use it to your advantage. Second way to make money in day trading using moving averages is a crossover strategy. As you can see here, again, we are on 2-hour time frames and we have now 2 EMAs at the same time, which is one with an input of 7 and the other with an input of 16. So the logic here is pretty simple. When we have a cross which looks like this, shorter term EMA crosses the longer term EMA, it is an indication for us to open, in this case, a sell position because the cross happened from the top to bottom. Now let's see all the potential entry points using this strategy. So we have a cross over here. As you can see, at first it crosses from the bottom to the top, then to the top to bottom, and then we have another cross over here, and finally another cross over here. As you can see, this strategy is not always accurate, but the simple way to filter out bad signals, which is normal in every strategy, is to basically never go against the trend. If the trend is bearish, you never buy and never take crosses into the buy position. And if the trend is bullish, the price is going upwards, you never take sell signals and basically crosses from top to bottom. Now let's go back in time and see how this strategy works in action. Let's play the price and see how the price action will develop. Boom. So now, as you can see, we have our first cross, which is an indication for us to open a sell position. In this case, we need to have a wider stop loss, like a stop loss of 38 or something points, and take profit could be points of 60. Now let's play the price and see how the trade will develop. Now we can see that the price went against us, but that's pretty much okay. That is why we are always using a wider stop loss, because that is what to be expected. The price always fluctuates and sometimes it will go against you, but boom, as you can see, eventually it will hit our take profit. And now let's see what happened further down the road and what we could have done more. And the last way to use moving averages for swing traders or investors or any traders that are looking for longer term trading is to use an EMA of an input of 100 or 200. Keep in mind that this particular EMA is not for entering into the market, it's not a signal to enter, it's not support and resistance levels, but rather it is an indication of the trend. So basically, when the price is trading above the line, it is an indication that it is a bullish trend and you can confidently open buy positions into the trend. And when the price actually crosses the line into the bottom side of the moving average, that is an indication that now you should be interested in selling, because that is now where the trend is going. Boom. Boom. Like this, you can open as many short positions as you want. And then you just follow the trend, and if you see something like this, basically that the price is trading on the middle of the average, that means that it is a channel or consolidation, and again you can adjust your strategy accordingly and trade in a channel. Boom. So that's it for these strategies. Hopefully you guys enjoyed this episode of moving averages strategies. If you want to see more of this in the future, leave a like button, subscribe to the channel, because we will be providing a lot of gems in the future.